Morning, everyone. Thank you very much for joining. Sorry, a bit late. I had everything set up because I hopped from one webinar to the other, and when I went back, the windows had all closed, so I had to reopen. I'm begging your pardon. This is the Crypto Minute with myself, Russell Shaw, Senior Market Specialist at FXCM. My email address r@fxcm.com. Today is Wednesday, it's the 13th of July, 2022. Let's just bring up our high-risk investment warning. I'll keep this on screen for a few moments. Just taking a look at Anna's comment. Interesting. I actually don't know. So the comment is it was Brexit silly given the given the data. I don't know. I don't know. Perhaps. I mean, again, I would suggest maybe the reasoning. Maybe the reasoning for it. I just picked up a lot of it was about xenophobia. I don't know if that's true or not. So I don't know the sort of social commentaries that I've read. I'm gonna pick up. Sorry, I'm gonna just show our references here. Howard's just asking, why do we look at BTC USD and not BTC USDT? We can look at the BTC USDT. What is USDT? Is that trade weighted? Is that the trade weighted US dollar, Howard? I'll take a look now. All right. No, it's a coin with par value. Par value, I'm not sure what that means. Par value as in par value, what does that mean? Coin with par value. US dollar to 1. I don't understand it. US dollar par value is it doesn't, no, it can't be. It can't be. I think it would be the same thing. US dollar. So the convention here is supposed to track the US dollar. It sounds made up. To be quite honest with you, it sounds made up. But it is made up. What we have here, let's just understand what we've got here. We've got a convention here, right? We've got Bitcoin to the US dollar. Bitcoin to the US dollar. This is a currency convention. So you can go euro, US dollar, pound, US dollar. This is going to be a currency convention. Okay. Making this par value would just be adding a complexity, and I don't understand actually what they mean. Par value, we talk about par value with bonds. Okay, so like a par value for a bond, a par value is generally 100. In your sort of exercise you do, par value is 100. So either trading at a discount or a premium to par value. I don't see how a dollar can trade to a discount or a premium to its par value. That just sounds made up. So it just sounds odd. Perhaps let me just try and perhaps. Okay, I think maybe this even that doesn't make sense. I was thinking maybe it's this denominator here might be influenced sort of by trade weighted. No, doesn't make sense. In fact, I would suggest that we probably look at Bitcoin to US dollar subject to correction, because it's the USD that's going to move. I don't know what USDT is. Sounds influenced. That's a. I don't think we should do that. I think it's going to just, if anything, perhaps confuse the issue. All right. That's my opinion. I've got to look up. Just also, I could be incorrect. I've got to just double check. I've got to just double check it. It doesn't sit well with me at the moment. All right. Just taking a look at Bitcoin. So we're just looking at the daily chart here. Okay. Just taking a look at the daily chart here. Let's take a look at the market rhythm. 1, 2. Okay, 1, 2, 2, 3. 1, 2. See where this is going? 2, 2, 3. Now I don't know if the next leg is down, but if we're looking at this in terms of a market rhythm, okay, some sort of heartbeat, okay, it's obviously looking quite ominous. All right, you can see that. Now, why do I bring this up? Because take a look at this. Take a look at this. All right, what have we got here? We've got a squeeze. Okay, you see that? And it's a tight Bollinger squeeze. So Bollinger theory says the squeezes, these Bollinger squeezes, that's the calm before the storm. Okay, and the reason it's quite intuitive. I think it's very unlikely that financial instruments can maintain a state of rest for long. The reason for that is because there's continuous news that's been released. There has to be continuous discounting. It means if we are at a state of rest, we kind of at an equilibrium point, which we might have extended trading ranges, but at some stage, something's going to be tipped. Okay, either we're going to get tipped on the numerator side, or we're going to get tipped on the dollar side. So it's unlikely that these squeezes can be maintained. All right. Now, the fact that we have a squeeze, okay, does suggest, and we've said this before, that there is a cyclical nature to volatility, and I tend to think that's correct. So when we talk about price cycles, that I find difficult to fathom. But if we talk about volatility cycles, I'm much more comfortable with that, because there does seem to be a sort of an evidence of some sort of constriction bubble. Constriction bubble. Now we're at the constriction. Here you can see sort of a trading range, but it doesn't stay really at rest for long. Then we move on to the next trading range. There's the heartbeat, right? Then there's that range dropping down. Now we've got the next sort of ledge, or whatever we want to call it, and we're getting the squeeze. Now, let's understand the timing of the squeeze is just before inflation data. So that's got me a little bit concerned here. In other words, is the squeeze, so in other words, has the crypto market been waiting? Has it been waiting for the inflation data to be released? And are we at the trigger point? Now, the issue with Bollinger Bands, so I like Bollinger Bands a lot. The issue with Bollinger Bands is that they are generally adirectional. There's no real, I mean, sure, Bollinger does develop his theory into trying to look at M and W patterns, etc. He does, and again, I think it's a really good technical theory, but Bollinger's in of itself is adirectional. In other words, the squeeze, okay, the squeeze doesn't, so it tells us there's going to be an expansion in volatility, but it doesn't tell us which way the breakout is going to go. In other words, the expansion in volatility could be to the upside, okay? Or the expansion in volatility could be to the downside. It doesn't really make that clear. Again, the theory has been developed so that there is a bias or a prejudice one way or the other, but the truth is we have to go to other tools, and of course the stochastic is I think one of the oscillators we can turn to. Again, it's not, there's nothing predictive about it with any certainty. All it can do is sort of nudge us in a probable path. That's all it can do. So we can see that the stochastic is starting to roll over. Now, if it does roll over, and if we head towards the red rectangle, then I would suggest the expansion in volatility is to the downside. And if the expansion to the volatility is to the downside, well, that kind of matches up with our heartbeat in terms of the Bitcoin market. It kind of matches up with that heartbeat. Again, now, what is the catalyst for this? What is the catalyst? And I think the obvious catalyst must be the inflation data subject to correction. I'm going to just tag that on because it's quite possible that inflation data comes out and nothing moves. But let's assume that the inflation data comes out, and let's assume that it is that 8.8% or 8.9%. Let's assume it hits 9%. We don't know. We'll know today. I think it comes out. I think it's. Let's actually just get a time for that because it's quite important. I think it's 2:30 my local time, which would be 1:30 UK. But let's just get a time for that because it is a market moving event. So I'm just bringing it up. I think it is 1:30 UK, 2:30. Okay, here's just Forex Factory. Let's just bring this up. Come on, what's going on here? Oh, there we go. All right, let's just go here. CPR. Oh, this has been reset. Let me just fix this up. Okay, sorry about that. All right, let's just get a time here. I'm begging your pardon. Yeah, so it's 2:30 my local time, which would be 1:30 UK. So just bear in mind the volatility sort of point. So this is a very important time. 2:30 ZA, 1:30 UK. Yeah, and Anna's saying, and that's exactly when the downside could start. But at the same time, Anna, I think we've got to watch. Okay, we've got to watch what happens if it misses or surprises in terms of moderation. What does that mean? And that's where, of course, it gets interesting because let's just say we're expecting 8.8%. Let's just say, and again, I'm just using an extreme example. Let's say it comes in at 5%, which it won't, but let's just say it does, right? That's a huge miss, but to the downside. What does that mean in terms of monetary policy? Does that mean that the Fed can take its foot off the accelerator? And if we get a foot off the accelerator, the point is, okay, the squeeze in the Bollingers might actually be an expansion to the upside. The volatility might be to the upside. So that's our issue, is that it seems as if there is going to be an expansion in volatility, but of course we're very much now beholden to the data, as it should be. Then we get a bear market rally. Yeah. So let's just I think put the facts as they are right now. We have moved into zone 3, okay, which is the bearish area. The fact of the matter, it's a very tight squeeze. So this zone 3 here is not particularly meaningful because we can get into zone 2 very quickly because it's a tight squeeze, right? But zone 3 nevertheless is on the bearish side. At the same time, we've got the stochastic moving over. Okay, so the idea here is there does seem to be a suggestion. There does seem to be a suggestion that the market expects the downside expansion. That's the suggestion. Again, we don't. It really depends on the data print. Okay, but I think that we need to acknowledge that the non-farm payroll seems to have kind of cemented the 75 basis points. Today's data is really, I think, to ensure, just to confirm that. In other words, I think it has to be a huge deviation from forecast to really move us away from the 75. And I think and it's quite correct that release is, you know, it's a key point. So what I think we need to just do just to complete the analysis, take a look at the weekly. The weekly is lower peak, lower trough. Okay, why? Now this is primary trend stuff. Lower peak, lower trough. That's downtrend. Why would we have a lower peak, lower trough? It's aligned with the fundamentals. Fundamentals drive primary trends. What's the underlying fundamentals? Well, we've now got a whole array of topics that we can choose. Number 1, monetary policy. Number 2, global trade. All seems to be pointing to higher US dollar. Now that is nerve-wracking for Bitcoin bulls. It must be nerve-wracking for Bitcoin bulls because remember what we said in the DAX webinar, if the trajectory continues, well then parity goes in euro, but also Bitcoin probably heads lower. Take a look at the momentum. Really strong momentum. I mean, this is deep in the lower quintile. What would be interesting here is just to throw in the RSI just to see how we're doing in terms of overbought, oversold. Definitely not overbought, but are we oversold? Let's just take a look. Not quite, you see, and that's the danger. Is that there is room for downside movement here. There is room for downside movement here. Now, there was one thing else I wanted to mention. It's not connected, but it's something that we touched on, I think, 2 weeks back. And it says a buying opportunity, perhaps in the Bitcoin winter. All right. There's something that I think just to tie up an observation we made, I think it was 2 weeks ago, gold versus Bitcoin. So what I want to do is add in gold here. All right, let's just get a relative strength. Let's go to the weekly. All right, so this is kind of the the analysis we did, I think it was 2 weeks ago, possibly 3. Let's add in. So yeah, this is obviously Stan Weinstein's approach to the market. Let's add in his 30-week moving average. We'll use the exponential. And the conversation that we were having was, you know, is Bitcoin? It's often, or it used to be, thought of as a haven like gold. So yeah, we were kind of looking at that, and the conclusion was no, it's not. Gold is certainly retaining its value far better than Bitcoin was. I'm going to just do something here. But where am I going? There we go. Sorry. I want to just bring up the FXCM sources here. Before I get into all sorts of trouble, let me do this again. USD. And let me pay in BTC USD. All right. Okay. All right. That's odd. Still retained it. All right. Nevertheless, let's move on here. We can see that there is a markdown. Here's the accumulation. Here's the markup. But what we said, if you recall, is that there was a relative overbought condition here. So let's just add that in. So I'm adding the RSI. And what's interesting here is that there was a overbought condition in terms of outperformance by gold. You guys remember that at all? And the idea was, well, this is not an absolute analysis, it was a relative analysis. And the idea here is, well, what's going to correct? Because it's a relative analysis, is gold going to correct or is Bitcoin going to correct? And we didn't know at the time, and I said, I don't know, but I think because of the heavy sell-off in Bitcoin, perhaps gold has to play catch up. And I think that's what's happened. Let's just use gold over here. That's better. You can see the gold's corrected. Isn't that interesting? So just the relative analysis between gold and US dollar just seemed a little top heavy in terms of gold's outperformance of Bitcoin. Gold's dropped off since then, and the idea is that I think that the overbought condition now is truly, for the life of me, I can't get FXCM here. All right. Point being, I think that there is a real risk now. So what is my interpretation of this? My interpretation is, I think there's a real risk. There's a real risk here of further underperformance by Bitcoin. That's what I think is effectively. So I think gold had to catch up. I think it's caught up. Now that it has, I think the pressure shifts back on Bitcoin. So I think that's where we will conclude, because we won't really know how the market reacts until the inflation data, the CPI, is out. I think then that's going to make for certainly interesting discussion. If there's any questions, please go ahead and pop those in. Thanks, Anna. Appreciate it. All right. I think what we're going to do is wrap up here. We'll catch up tomorrow. Anybody needs to contact me, just send me an email. And I know that there is some outstanding emails for me. Promise I'll get to them at some stage. I'm begging your pardon. All right, guys. Thanks, Rob. Thanks very much. All right. Let us wrap up here. We'll chat tomorrow.